One of the biggest buyers of stocks over the past few years appears to be stepping back. That are the companies themselves. New data shows that stock buybacks continue to decline. If that continues, is it a bad sign for the overall market? Ari Wald with Oppenheimer, Chad Morganlander with Washington Crossing Advisors. Welcome to Trading Nation, gentlemen. As always, Chad, is that stock buybacks been a big part of the market? Is the fact that they're declining a reason to not own stocks unto itself?
Well, I wouldn't consider this an entirely bearish event, although it will have a modest headwind to earnings. S&P earnings growth, we think, is way out of whack from reality. And of course, this will be one of the other reasons why that will have to be adjusted for 2017 into 2018. The overall outstanding shares over the last 5 years on the S&P have been declining modestly by roughly about 1%. That also, again, will also affect the long-term forecasted returns that we have. We're roughly at around 6% long-term forecast returns. Maybe that goes to 5.5%. One has to consider, though, why are they stepping back? We believe it's because, one, valuations are pretty high at this point, and that would actually be somewhat cautious. And two, also, you're going to have this new tax code that's going to come out for corporations, and a lot of these companies have been issuing debt to do these buybacks. So they're probably going to take a step back for the next several quarters to see how that also pans out.
All right, Wald, I'm not exactly sure how you would chart this. I mean, there's no real way to chart buybacks, is there? I don't think so. You're going to look at the overall market for us?
Well, what we can look at we can look at an index of stocks, of S&P 500 stocks that have had the biggest buybacks in recent years. At least look at how these shares are performing. And, the general takeaway is, I think there are things to be worried about in the market. I don't think this is one of them. That if you look at this index, and what's interesting is that the performance of the stocks with the most buybacks did indeed peak ahead of the overall market back in 2007. So in the past, it has been a good warning sign, the fact that this index peaked in June, summertime 2007, ahead of the broader market peak in October, that bearish divergence did mark a good warning sign at that point. This time around, we have this index breaking out to new highs, so you haven't seen the same type of weakness in these shares. Again, not an indicator I'm really bullish or bearish on, but at least I could say how I see it, it's not bearish.
Not bearish. Kind of aligns with Chad's view. May have a little bit of a headwind, but not a reason alone to dump out of the market. Still, it is something to watch. Companies, maybe they're saving their cash, guys, for an expected repatriation. That's something else that I thought about. Maybe they're waiting to see if tax law changes. Chad and Ari, thank you both very much. Appreciate it. Folks, thank you for tuning in to Trading Nation. As always, I'm Brian Sullivan. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.